All right, here was the trade I took today. Here are the executions for the trade that I took today. It was a short on the Nasdaq. Here's what it looks like, 1.5 on the day. But let's get into it. Let's actually go on a recap on how I was able to take this trade, the exact discretion I had behind it, and my exact execution as well. So I'm going to take off execution since y'all seen it, so it doesn't get in my freaking way. And let's get it. First things first, I start on my daily bias when I come into the day. We didn't see much on the daily bias. The only thing discretion wise that we have seen, meaning it helps us understand what's happening within the market, is that we have this new week opening gap that we have opened above on or we have closed above on Nasdaq, and we did not close above it yet on the ES. So that was something very important to understand, because we were still within this new week opening gap on ES at the start of the day. Basically, the way that I use these new week opening gaps, I just treat them as like a fair value gap. So I was definitely expecting something to happen when we do fill this ES new week opening gap. So now we can hop on the 4 hour, and I usually just go down from the daily, the 4 hour, the 1 hour to like the 5 minute, maybe the 15 minute, depending on like what I'm looking for. I don't really hop on the 15 minute for my general analysis. That's more for my entry confluences. But here on the 4 hour, we didn't see too much. We just had more precision on what was really happening between this new week opening gap. That was really what I had my eye on today. Another thing that we do see here is that we had a lot of built up sell side liquidity down here on the 4 hour. So we had a lot of built up sell side internal liquidity here between both indexes, which is definitely something to take notice of. If we have set liquidity between both indexes, the Nasdaq and the ES, then it's more likely that we do take them out. Now we can drop down to the 1 hour, and let's have a look at what we see here. So coming into the day, we also seen this was our big move down for the day, but prior to that, we had a lot of built up sell side liquidity on the hourly too. So we have 4 hour internal liquidity that we could see us taking out in this 1 hour. So my discretion, my overall higher time frame discretion, right? The whole point of me having it for the first place is that I want to have my higher time frame overall discretion and my model intertwined together. And when they do, it makes a very high probability and an increased edge in the market. So what my overall discretion is telling me now is that we're most likely going to want to come lower, because we have 4 hour built up internal sell side liquidity and 1 hour as well. As well, on the 1 hour, this is where we had majority of our confluences, is that we had this 1 hour gap right here on the Nasdaq, and as well as a 1 hour gap right here that we wanted to fill, and a 1 hour gap right here too. So we have all these 1 hour gaps. We can probably ignore that one because we didn't even mitigate that one. But as you can see here, what was I just talking about? How our confluences pair between the indexes. We have those same gaps on the ES as well. So boom, I marked those up. And now what do I want to see? All right. So immediately as I seen this, we have two gaps together. And the confluence that I made, the confluence that I coined, called IRA, inverse retrace action, states that we can be coming lower to inverse this first gap and then retrace from the second gap and push higher, action higher. It's called IRA. I have it in my Discord. I explain it 100% in my Discord. So that was definitely something that I wanted to see us happen into our day. So this means that we're 100%, we could be moving higher. We have an overall trend higher, but what lies within a trend? Expansions and retracements. Expansion higher, retracement lower. Expansion higher, retracement lower. So I caught the retracement of the higher time frame expansion today. So that pretty much wraps up my overall higher time frame discretion for the day. Now let's hop into our more general analysis. So I'm going to go into the 5 minute time frame here, and I'm going to get rid of these gaps just so they don't mix us up. But no, we want to target these gaps for the day. So that's why I marked that them out. I'll keep this one so you guys can see. I'm also going to mark out the line that marks the closing of our new week opening gap being filled, because that's very important to notice. So our new week opening gap was filled right here. If I drop down to the 5 minute, you can also see when do we have a retracement? Exactly when we fill our new week opening gap. We used it exactly like an inversion of a fair value gap. So now, what do we see on our 5-minute immediately? All right, so we're on our 5-minute, we're doing our 5-minute general analysis. Well, we see here that we have an SMT divergence. Where's that? Oh, boom, right here. All right, I know it's a little small, you can't see it, but this was something that I did notice that you should 100% acknowledge, because this is very important. As we see here on the NASDAQ, we have higher high, lower low. All right, and at the same time on ES, we have boom, um, higher high, higher high. All right, so what does that mean? We have a SMT divergence. What does that mean? If it's at the highs, we can expect price movement to push lower. If it's at the lows, we can expect price movement to push higher. But we have a SMT at the highs, meaning that we can see a bearish expansion. All right, so I marked that out. That's one thing that sets the tone of my overall general analysis. And now I'm trying to make my discretion, my overall discretion, match up with my model. All right, so now I kind of go into my model. I'm identifying structure in the market. I pull up my GAN box to make it look easier. And then boom, I kind of just mark out where we see our 5-minute structure at. Let me change the colors of these so it's not so confusing. I have my Gambox settings also in my Discord if you want to check that out. I have my Gambox settings in my Discord. It's free to join if you want to check that out. I set my structure, my 5-minute structure, where I see clear buy side, sell side. All right, now we're looking for 2 to 5-minute CISD. Let's pull lower. We see our equal lows. We got some flush down here. Boom, mark that out, right? But what do we see here? We see that we push way lower. We don't have a valid displacement before we can get an entry, and we already hit our targets, right? The bottom of our accumulation zone on the 5-minute, all right, bottom of our structure. We already hit those targets before we can even have an entry. So what does that mean? Now I'm kind of just looking for a continuation lower, right? It's now my continuation variant, where it's pretty much the same. The only difference is that we're using the bottom of our structure for those equal lows for our CISD, apart from these equal lows up here that we would originally be using. All right, so now I'm looking for a continuation confluence, a retracement into a continuation confluence. I'm not really using ES anymore. I see that, I already have my favorite index, so we can stay on here. All right, so where are my 5-minute continuation confluences? Because I typically like to take a trade that's equal to our structure time frame wise. So 5-minute structure, 5-minute continuation confluence that we were tracing to, because I'm looking for displacement retracement, because that retracement signifies one last pullback to take out the rest of the buyers, so then like the people who are patient in the market can then catch that move lower. So I identified that we had a 5-minute order block up here, and clearly we did not retrace back into that 5-minute order block. So now I'm looking, like, I'm wondering, right, I could wait for this 5-minute to close, but now I'm like, okay, we're about to miss our entry. And this is not like me trying to speed myself up, but this is me trying to understand the market more, right? So this is when I go in my higher time frame. What do we see here? We have a 15-minute order block right here. Boom, smack down, smack down. All right, so boom, I mark on my 15-minute order block, drop back down to the 1-minute time frame so we can get more of an entry precision on our entry. All right, and although today, here's where I went wrong. I did not enter in off of my higher time frame confluence. All right, which is where I went wrong. I was stuck up on that 5-minute, trying to look for that 5-minute, and I didn't really take into account that I should have just entered off of the 15-minute order block, because we never really entered in off of the 5-minute. So if we go into 5-minute time frame, we can see that we eventually did create a fair value gap, right? Which I wanted to enter in off of. I entered in off of a 5-minute continuation confluence. All right, and we see we had an order block right here that we eventually did create. Well, if we drop down to the 1-minute and really see closely, we never even mitigated that 5-minute fair value gap, right? And you see here, well, MT, we did, but no, this was 939. Our 5-minute fair value gap formed at 940, so we didn't. We have 940 candle when we formed a fair value gap, 5-minute fair value gap, and then boom, candle after that, like there's nothing. There's no retracement into this 5-minute gap. All right, and I'll type it down so you don't get confused. So we have 5-minute fair value gap. We never ended up using this 5-minute order block, so I'm going to delete it. There's just something to notice. And then we have 15-minute order block. So boom. What do we notice here? What do we notice here? So this 15-minute order block formed, you know, at, sorry, I don't know why I said, you guys don't know. It formed at 9:30. Yeah, it formed at 9:30. All right. Our next 15-minute order block was going to form at 9:45. And we see that we ended up retracing back into this 15-minute order block at 9:33. So that should have been really our entry, if I'm being honest. 9:33 was the optimal entry for this trade today. All right. But I was very stuck up on this 5-minute fair value gap. But we all know that our 15-minute weighs over our 5-minute. Therefore, I should just pick the higher time frame confluence instead of the 5-minute fair value gap, which is why I entered in a little later. It was still good entry. It was just like I did not want to miss the play, so I was like, all right, I'm gonna have a later entry. Entered about this candlestick. I already showed you guys the executions. Yeah, entered in this candlestick, which is still pretty relative. Stops like probably at the 50 point of this 5-minute fair value gap. $250, one con. Boom, take profit at our IRA on the 1 hour, because remember, IRA, we have one fair value gap that we inverse and one fair value gap that we retrace from, and then we push higher. All right, I'll mark it out. Boom, 1 minute. Boom, inverse this, come lower, retrace, and then push higher. So that was pretty much my trade for today. I mean, simple continuation variant of what I trade. I mean, it was A plus, especially with that SMT. If I had any cons, I would say for today, I would definitely say I had a late entry. Should have weighed the 15-minute order block and the 5-minute fair value gap and entered in a little earlier. Another thing that I could say is really just that. Yeah, honestly, really just that. Overall, great discretion, great higher time frame bias for today, and matching it and pairing it with the discretion. Identifying this 5-minute SMT here, that was big. And identifying that this was going to be a continuation play. Other than ES, which I'm not even going to talk about. I'm going to backtest that later to see what actually happened. But overall, great analysis. 1.5 on the day. Then we're back tomorrow. I'll see y'all boys. Deuces.